Okay, so I think people are logging in at the moment, so I think we can get started. So good afternoon, everyone, and a huge thank you for joining us for today's State of the Nations report launch on foreign direct investment in the UK's creative industries. My name is Bernard Hay, and I'm Head of Policy at the Creative PEC, and will be chairing today's session. So for those of you that haven't heard of us before, the Creative PEC is led by Newcastle University in partnership with the Royal Society of the Arts. And this unique North-South hub model enables us to better represent the creative industries right across the UK. We're also funded by UKRI via the Arts and Humanities Research Council, and I'd like to take this opportunity to express our thanks for their ongoing support and commitment to our work. So today, we're going to be exploring the latest research on foreign direct investment in the UK's creative industries. We know that leveraging additional FDI is going to be a priority for national and local government, not least through the forthcoming UK industrial strategy and creative industry sector plan. And so what we hope to do in this session is to explore the nature of creative FDI. Where is it coming from? How does it vary across creative industry subsectors and places? And also, where does the UK invest in creative firms in other parts of the world? So before we dive in, I've got a few housekeeping notes. First of all, today's event is going to last an hour, and we're going to record it, and it'll be available shortly on the Creative PEC's YouTube channel. And then second of all, in terms of format, we're going to begin with a short presentation from two of the report authors, Dr. Daniel Simandjuntak and Dr. Jonathan Jones from Newcastle University, after which we're going to open to a panel discussion and Q&A with two fantastic respondents, CEO of Concurrency V. Dewey and Global Media Editor of the Financial Times, Dan Thomas. So throughout the session, you're going to be able to post questions via the chat function. So if you do have any questions, please do post them there, and you can do so anonymously if you'd like to. Whilst we might not have time to answer all of your questions, as much as we can, we will try and follow up directly by email if we can't get to them in the Q&A. So please, any thoughts or comments, do put them in the Q&A bar. Equally, if you'd like to be able to access closed captions through this event, you can find the link at the bottom of the screen. So what I'd like to do at this stage is to introduce my colleague, Karen Brodie, who's Deputy Director for the Creative PEC, to say a few more words about the report and the PEC.
Thanks, Bernard. This State of the Nations report from the Creative PEC is the latest in our series focusing on the international outlook of the UK's creative industries. It provides the latest evidence on inward and outward creative foreign direct investment, which is particularly relevant, as Bernard said, in the context of the UK's forthcoming industrial strategy and the creative industry sector plan, as the government sets the environment for the UK's growth and global competitiveness in a shifting international landscape. This report fills the evidence gap on creative FDI and provides baseline data for inward and outward investment by subsector, investment type, geographical distribution, and rationale, against which future performance can be measured. And the report shows that the UK is in a leading position in both inward and outward FDI, and creative FDI accounts for an outsized share of all UK inward FDI projects over the last decade. It draws attention to the need for national policy that ensures that investing in the UK's creative industries remains attractive and straightforward for foreign investors, as well as supporting creative firms to implement internationalisation strategies. And at a local, regional and subsectoral level, there's a role for policymakers in supporting and promoting distinctive skills, capabilities, clusters and supply chains to foreign investors. At Creative PEC, we want to help bring about a more inclusive and informed approach at the global level to policy making for the growth of the creative economy. And this report provides data to support that ambition. So we hope you find it stimulating and look forward to hearing your thoughts.
Great, thank you so much, Karen. So at this stage, we're going to turn to two of the report authors to go a little bit further into the report. So I'd like to hand over now to my colleagues, Jonathan and Daniel, to share some of the headline findings.
Okay, thank you, Bernard. I'm just going to share my my slides. Okay, so yes, as Karen mentioned, this is the second report on internationalisation, following the first report last March that looked at international trade. So the emphasis of this report is on inward foreign direct investment, outward foreign direct investment in the UK's creative industries. So in terms of the outline, I'll just give a brief discussion about the background context, some of the aims of the report, before going into the main meat of the report, which, as we said, is split into a couple of main sections looking at inward and outward FDI, and a deeper dive into the role of mergers and acquisitions of UK creative companies, with some conclusions towards the end. So foreign direct investment is often seen as an important component of the global economy. It's one strand of the globalization, internationalization process. In terms of size of flows, global flows last year close to $1.5 trillion, although that is against a backdrop of global shares tending to be witnessing slower growth compared to growth in trade and output of the global economy, but still, of course, contributing a sizable component of the global economy. There's also been a long-standing interest in the role of foreign direct investment in the UK economy, from academics looking at the impacts of FDI, location determinants, but also across a broader spectrum, policymakers, government, industry bodies, where FDI is often seen as one means of increasing investment into an economy or a region. And there's a range of evidence that suggests that there's potential benefits of such investment relating to perhaps to spillovers, agglomeration economies, knowledge spillovers, etc. Although, unfortunately, there's been evidence lacking for FDI in the creative industries, despite, of course, these industries being a large and growing component of our economy. So the underlying aim of this report is to help further our understanding of UK creative FDI. It does this using project-level data on foreign investments from the Orbis cross-border investment database. So this is recording, as I said, project-level investment. So it's in essence the count of, or the number of investments that occur, for example, in the UK in a given year. So there's the caveat that it's not picking up necessarily the size of the investment in terms of the scale, but rather the counts of the number of these investments, hence the project-level data. Benefits of this, though, it does capture a range of characteristics of these investments, such as the industrial activity. So we can highlight the creative industries as recorded by the DCMS sector definitions, the type of the investments. So in essence, we can split it between new, or which is often called greenfield investment. So this is where there's investment occurring at a previously undeveloped site, as well as mergers and acquisitions, where there's an investor taking a controlling stake in terms of its equity share. We can also look at location aspects in terms of where the investment's coming from, and also at a kind of finer spatial level in terms of the destination of the investment as well. We're primarily looking at inward FDI into the UK. So this is investment from other countries, for example, US, France, Germany. But we'll also look at outward FDI from the UK as well. So where is foreign investors locating, UK investors locating in countries abroad? And finally, towards the end, we'll have a deeper dive into some rationales behind merger and acquisition behaviour, and hopefully have some time to raise some perhaps policy considerations and directions for future research on creative FDI. Okay, so starting off on inward FDI, so that's FDI locating within the United Kingdom. And straight off, we can see that the UK is a leading destination globally amongst inward investors wanting to locate in a country. So we can see here the first column. This gives the global share of creative industry FDI. So where all FDI is locating. The most preferred locations or favoured locations. USA is the highest ranked, but the UK is ranked second here. And then we go down through the top 10 top 10 destinations, which actually account for over half of all inward investment flows. We can compare that also with the global share of where all FDI occurs. This isn't just FDI in the creative industries. This is across all industries. So we can see that the UK is also a leading destination for overall FDI as well as creative FDI. And it reflects the UK having a long-standing record of being able to attract such FDI. So importantly here, highlighting the fact that the UK is attracting high levels of creative industry FDI as well. And this pattern also occurs if we break down the creative industries by the subsectors. So these are the 9 subsectors as defined by the DCMS. And we can read across here from advertising through to publishing. The UK is for the vast majority of these, the top 3 ranking destinations of locations for inward FDI across the creative industries. We have the outline here of crafts, although in general the number of projects globally in crafts is relatively small. So a small number of projects can have quite a large effect on the ranking within that subsector. But we can see that UK is emerging as a competitive destination of inward FDI projects across the creative industries. We can also highlight the importance of the creative industries for UK FDI. So this blue line here on the right scale axes here tells us the percentage of creative FDI as a total of all FDI in the UK, and this hovers around about the 10% mark over the period which we're looking at, which is between 2013 and 2023. So there's some peaks and troughs within that, but overall, the creative industries have accounted for, on average, 10% of all inward UK FDI over the past 10 years. There is a background here of declining project numbers since 2019. So this, the bar charts here, pick up total FDI projects across the creative industries over the time period, and we do witness this decline from its peak in 2019 to 2023. Although as a backdrop to that, this chart highlights different measures of calculating or measuring FDI projects. The key thing to highlight from this graph here, so this is FDI projects across the entire UK economy, is that it's not just the creative industries that's witnessed this decline, but it's a pattern that's occurring more generally across FDI, across all sectors, which the creative flows are picking up as well. This graph also highlights the size of the different subsectors within these creative industries. So we can see there's variation in the levels of FDI across these different subsectors. IT, software and computer services is the more dominant sector, but there's notable shares also for advertising, film, publishing, music as well. Although it is a relatively concentrated picture, as you can see, so the top 3 subsectors actually account for 90% of projects in a given year. Although in terms of the IT, software and computer services, it's fallen from peaks of 80% of investment down to 70% in recent years. So perhaps slightly more variation encountered in more recent years. As I said earlier, we can also distinguish FDI by the type of project. So in essence, between new or greenfield projects and mergers and acquisitions. We can see M&As tend to be the dominant type of project for UK inward creative FDI. So the top row here highlights that 54% of all projects over the period were mergers and acquisitions, compared to 32%, which were new projects. Smaller number of projects which are reinvestments. So this is investments by investors that are already located in the UK. And we can compare that to the bottom row, which is the non-creative sectors. And we can see that pattern switches. So non-creative sectors have new projects as the main source of or type of investment, as opposed to to mergers and acquisitions. And within the creative industries, this pattern of this merger and acquisition dominance to some extent appears across the vast majority of these industries, and has been growing if we look at the past 3 years, so 2021 to 2023. Although that is against a backdrop of generally declining numbers of new projects across the economy. So even in the non-creative sectors, mergers and acquisitions are now on par with new projects. But extent that the characteristics of the type of investment in the creative industries is reflected by these mergers, or mainly acquisitions, I should say. Acquisitions are the main feature of these M&As. We can also look at the source of this creative FDI. Again, some concentrated or relatively concentrated patterns emerges initially. So inward creative FDI is dominated mainly by USA and Europe. North America accounts for over 50% of inward FDI in the creative industries. Europe accounts for 30%. In fact, 12 of the top 20 source countries are European. So although these numbers are relatively smaller, scattered across these European countries, and again, just 25 countries account for over 90% of inward FDI. In terms of European FDI has actually increased in share over the past 3 years, accounting now for close to 40% of number of projects. We can dig deeper. Won't have time to go through all the nuances, but for example, there is variation across project types and creative subsectors. So, for example, India and China are relatively strong in new projects. So we've got new projects into the UK here versus mergers and acquisitions, and we've got slightly higher shares or higher shares coming from, for example, India and China into new projects. And overall, rest of the world, i.e. excluding North America and Europe, account for larger shares of new projects versus M&A projects, which tend to be mainly sourced from the US and Europe. And we can also have an example of how this varies across the different subsectors. So again, there are some nuances that appear. So although North America is dominant in advertising, in film, IT, and music, we've got Europe actually having or being the dominant source of investment for architecture, for publishing as well. And a lot of the feature of these industries here within Europe, this purple, is the new projects. Okay, so Europe being stronger in new projects, where they're being more dominant in overall inward investment. Rest of the world also feature relatively high in sectors such as IT and architecture as well. So variation when we start splitting it down by project type and by subsectors. Final characteristic we're going to look at in terms of inward FDIs, we've looked at type, we've looked at source, the subsectoral breakdown is a regional location pattern as well. So this looks at the UK location at the main urban area. Again, there's this kind of concentrated pattern that is emerging. So London is the main destination, so over 50% of inward FDI is concentrated in London. This is slightly higher for new projects. Over 60% of projects are located in London. Mergers and acquisitions just under 50%. The top 10 locations also account for the majority of creative FDI. So these account for 70% of creative FDI, and these are the large urban areas, in essence, of the UK. And as I said, especially if we look at the overall pattern, potentially tends to be clustering of M&As in the southeast region. But if we look at these pictures here, we can see there is a spread of FDI across the regions and across the nations of the United Kingdom. So we have got this relatively broad geographic spread. We can also look at project shares. So to allow for some spatial build-up of FDI around these urban areas, we can aggregate this up to a slightly higher regional level. So this is looking at the regions based at the international territorial level 2. So in essence, the old NUTS 2 regions. So the left-hand map looks at project shares. Again, it picks up in essence to a certain extent the pattern we witness here for the urban locations. There's concentration, London around the southeast, but also extending into the urban areas around the UK as well. We might expect large flows to go to areas where there's larger economic output. So to try and account for the economic size of regions, we can look at a location quotient as well. So this in essence looks at a region's share of projects and divides it by that region's share of output in that industry. And this is the bluey purple graph or map on the right hand side. So if we start accounting for the economic size of regions as well, to a certain extent, there's a greater geographic spread of this creative FDI, so highlighting potential relative strengths of FDI in these regions. We can also again break it down by some creative subsectors. So just to give an illustration, so this is just a selection of 5 of the largest subsectors in terms of numbers of projects. The deeper colours, the darker colours indicate where FDI is occurring greater compared to its economic output, and the industries in the higher quartiles, or the regions in the higher quartiles, I should say. So if we pick out these darker regions, we can see that there's again a spread if we start breaking down by subsector across the regions and across the broader nations of the UK as well. So again, this variation in pattern, if we start breaking down some of these characteristics by subsector, and again in the report we also do it by project type as well. So a very nuanced picture in terms of some of these characteristics of FDI. I'll hand over to Daniel, who will have a talk about some outward flows.
Hi, thank you, Jonathan. My name is Daniel Simandjuntak, and I'll take us for a brief look at the other direction of FDI, that is the outward foreign direct investment from the UK, or OFDI. Now, UK's creative OFDI means that the UK firm acts as the investor for a creative or project abroad, or acquires at least 10% of ownership in a foreign creative business. Similarly, the data we use spans 11 years between 2013 and 2023, and we count the number of projects. So 11% of UK's outward FDI is creative, and out of this, 86% of projects go to the 25 countries. Now, given UK's geographic location, the top 10 countries receiving creative FDI from UK are relatively diverse, as half of them, if you see here, are outside of Europe. Now, USA is the largest single country destination, receiving nearly a quarter of UK's creative outward FDI during the same period. Countries in Europe collectively still absorbs a large proportion, around 41%, while the remaining 35% is spread across the rest of the world. So when disaggregated by type, USA remains the favorite destination here for both new and M&A projects. And as we see in the left map, for new projects, USA attracts a fifth of UK's outward creative projects, new projects, while Germany is a far second. But the next top destinations are in the other continents, so to speak, Singapore, Australia, India, UAE. For the M&A projects, however, on the right map, the top destinations are more concentrated in Europe and North America. Now, if we look across time, the number of projects in the following slide, the number of projects has also fallen since 2019. Looking at the bottom two graphs, the post-pandemic trend of lower levels of UK outward FDI to each region of destination hits both creative and non-creative sectors. Now, despite that, Europe and North America seems to remain popular destinations for UK's FDI in three subsectors with the largest number of creative projects, namely IT software and computer services, film, TV, video, radio, and photography, and advertising and marketing. Meanwhile, in the past 2 years, we see that the rest of the world appears to receive more UK FDI in film, TV, video, radio, and photography, as well as in publishing. Now, if we look at the subsectors in the next slide, we look at the subsectors inside each type of outward FDI. More than half of any type of outward FDI from the UK targeted projects or firms abroad in the IT software and computer services subsector. The second place is advertising and marketing, especially for new projects. So again, we see some split of the subsectors here. Now, going forward, when we look at the composition by subsectors, in the next left column, we see the outward FDI in creative sectors, which is the top bar, are more evenly split new and M&A projects, whereas the outward FDI in non-creative sectors, which is the bottom bar, tend to be new projects. But of course, once the creative sector is split by its subsectors, we see that the outward FDI in half of them, say the blue stars, are mostly new projects, while the other half in purple hollow stars are mostly M&A projects. But if we see in the right column, we see that the trend in the last 3 years, the proportion of outward FDI in the form of M&A has increased in all subsectors, except architecture and crafts. And as observed before in inward FDI, this is a similar trend. And therefore, this evidence of increasing importance of international M&A as the form of FDI is something we find interesting and is worth further investigation. So I hand back to Jonathan.
Thank you, Daniel. So yes, the main body of the report focuses on this inward and outward FDI trends, but we also do a deeper dive towards, as we highlighted earlier, one of the trends that we do find, and that's the role of mergers and acquisitions of UK creative companies. So we can see this, as I highlighted earlier, this prevalence of M&A activity for inward creative FDI, and also in terms of the subsector of the IT software and computer services as well. Now, there has been some previous Creative PEC research that looked at the motives of inward FDI into the UK. So what are the reasons investors want to look or want to locate in the UK? But this analysis excluded merger and acquisition activity. So I've got the reference to that earlier work. So what we do here is try and investigate the potential reasons or rationales of these mergers and acquisitions into the UK. And we can do this by exploiting some text-based comments that's provided in the data set that describes the underlying investment decision or underlying rationale of these mergers and acquisitions. So it's quite unique in that it allows an investigation to a large number of these M&A projects that wouldn't necessarily be possible using more in-depth qualitative studies. So we're using these text-based modelling techniques. So in the interest of time, just a quick broad overview of this. So we can start off by looking at some word clouds. So these are the most common frequency words that appear in the rationales of these M&A projects. And we can break them down across all mergers and acquisitions into the UK, strip out the creative, focus on the creative, and also look at the IT software and computer services, which is the largest category of FDI in the subsector. We can highlight that creative industries, perhaps to be expected, highlight some more sector-specific rationales. So we've got software, we've got design, data, capabilities. So these are the fundamental reasons why these investors are wanting to take over, acquire UK domestic firms. So quite important insights we can gain into that. and within the IT, software and computer services subsector as well, which is quite a broad sector, which perhaps we might not be able to grasp what the specifics of the projects are by just highlighting a broad IT, software, computer services categorization. We pick up the role of games, software, technology, etc. We also do some topic modeling techniques. This, in essence, is looking at how words are collected together, which produce key themes, and then highlights the main words associated with these themes. And again, it highlights the potential likely pull factors of the creative industries mergers and acquisitions that are occurring in the UK. And again, we can break this down into creative and the broader IT subsector. What the analysis does is put words into certain themes or topics, but it doesn't entitle what these themes are. So that's left to the authors or in this case us to kind of put some broad headings onto this. So we can see we've kind of highlighted the topics on the far left that relate to more customer-oriented issues, as we can see in the words that appear. Those that are related to organizations in terms of the team and talent, global market growth, and then a slight split as we go between creative and IT. And if we look at the IT, again, the role of technology, digital, etc. But it's highlighting some important pull factors that are likely to lead to these mergers and acquisitions. So in brief, again, you can find a summary of these main findings in the report. Okay, UK globally competitive destination, M&As increasing as a proportion of creative FDI, but also to some extent non-creative. We've got some dominant sources, but also some new sources as well in terms of India, China, when we're looking at new projects and the rest of the world. There's concentration within the UK, London, South East, but perhaps more varied pattern at the subsectoral level. UK's undertaking predominantly large amounts of outward FDI as well in terms of its internationalisation outlook, and we're looking at particular rationales behind M&As and why they're wanting to locate in the UK. Potentially large range of policy implications, which perhaps hopefully have time to discuss later, hopefully in terms of the general investment environment of the UK, further promotion of the UK, the importance of place and region, potential linking to creative clusters, and perhaps helping firms to carry on investing through perhaps scaling up and innovation potential, and also highlight some future directions for the report as well. But yeah, so that's the overall roundup. So I'll hand it back to Bernard. So thank you very much.
Thanks so much, Jonathan and Daniel, for that really rich overview of all the data and insights. And I think for me, I'm just taking away a lot of very interesting subsector and regional variations. So I think for those listening in, any questions around any of this, please do start to post them in the chat. So it's now my great pleasure to turn to our two expert respondents. So format is that we're going to give both V and Dan, I think, up to 4 minutes to share their reflections and thoughts, and then we're going to open to audience Q&A. So do get your questions ready. V, if I could perhaps turn to you first, what were the things that stood out for you from all of that?
I think for me, it was both for inward and outward, was specifically who our major investor is the US. And I think coming, as you can hear my voice, I'm not a natural citizen here. I'm originally from the States, and that's, for me, I think that's the top of mind, what's coming up with the Trump industry. I think that's something to keep in mind, definitely. I know we have other factors, but especially knowing about the eventual trade wars that they're speculating over, I think for me, that's the biggest concern. But then also too, one area I think it was the one thing that came up, and even coming from, because I do come from originally from industry, which I worked at Mattel and Adobe, but now I'm more in SME micro. I think for me too, to see the breadth of how everything was spanned across for the creative sector, and because I have my hands in different types of creative sectors, be it tech, be it consultancy, I think that was an interesting perspective to see. But my mind keeps going back to the continuation of this funding. especially with Trump. And that's where my mind keeps going. I know I wish I could give a broader, but my concern just goes right to that direction. So.
No, thanks so much, Fee. And I think that's definitely something that we should come around to. You know, there's wider factors that affect FDI, and particularly with main trading partners and sources of and destinations of FDI. Dan, I wonder if I could come to you now. It'd be great to hear your reflections on what's been shared.
Yeah, thanks, Bernard, and thanks very much for inviting me as well to this webinar. Well, I'm the global media editor of the FT, so I spend a lot of my time talking to investors around the world. Be it the big Hollywood studios and the big investors who are super interested, super keen to get involved in the UK. And there's pluses and minuses to that. So it's really interesting to sort of see the direction of funds going back and forth between the country, but clearly it's great that money's coming into the UK, and we can maybe talk about this a bit more. But there's always going to be concerns over the UK becoming more of a service economy to, let's say, the Hollywood studios, who, I don't know, for example, the new Wicked movie is being filmed here, but the IP exists in Hollywood, which is a long-term concern for the UK, I think, going forward. And again, you can say the same thing about the M&A side of things, which is great to see M&A. It's great to see transactions and stuff. And obviously, as a journalist, I love covering M&A. It's the best topic to get into. But at the same time, there is going to be a long-term concern that the UK is losing its crown jewels of industries, and when we need to be sort of very mindful about sort of keeping those clusters together, keeping the creativity together, and keeping our economy as a whole really vibrant, I think, as well. So those are the things I thought were really interesting. I thought the report showed very clearly that the economic benefits of the sector are spread, actually. I think more so than perhaps people sometimes realize. I think often there's a sort of assumption that all the kind of creative money goes to London, for example, which does have its perhaps a disproportionate share. But at the same time, your report, I think, really showed that there are clusters all around the country, which, again, the government, when it thinks about policy, can think about leaning into, about developing and help supporting going forward. But from my side of things, I talked to obviously I talked to industry, but also talked to the government as well. And we had in fact, I did the first interview with Lisa Nandy back in at the end of August, which was pre-budget, to be fair. So maybe things have changed slightly, but even then, it was quite clear that there was no real money in the pot, particularly for creative industries on a very basic level. Anyway, I think everyone has to now everyone within the UK, within the creative industries, is having to make a case for the economic benefits of their sectors. And I think, again, this report really helps to show that this is important to the UK.
Thanks so much, Dan. I think that really segues actually quite nicely into some of the audience questions which are coming through. And I think both Dan, yours and V's comments, I think, have pointed to kind of, if you like, wider macro factors that are affecting FDI into and out of the UK. And we've got a question here around effects of Brexit. So we know that Europe is also quite a key part of this story. So the question is that the effect of the pandemic on FDI seems quite clear from the data, but have the researchers been able to identify any effects related to Brexit? Has FDI between the UK and mainland Europe remained at the same kind of level? So, Jonathan, and I don't know if you would perhaps like to pick this one up in the first instance.
Yes. So, hello. Yeah. So, in terms of inward FDI into the UK, as we did highlight a bit earlier, we have picked up a slight increase in the numbers that are coming into Europe as a proportion to the rest of the world. So this has gone up from 30% previously to 40%. Although this is difficult to necessarily pinpoint entirely on Brexit, because we know there's a lot of things going on around that time period as well. We've got COVID, we've got the general broader global uncertainty. In terms of outward FDI, I don't think we've looked at the temporal trends for that. Daniel might be able to shed further light onto that. But there could be, and this is which we do highlight a bit later on, avenues for further research to try and pinpoint specific effects relating to specific broader policy interventions. But there does seem to be some changing pattern in terms of where these proportions of projects are certainly coming into the UK, not necessarily out of the UK.
Great, thank you, Jonathan. And I mean, I think related, I was really keen to pick up V's question on US, and we obviously don't know exactly how things might change under Trump administration, although we've heard things around trade tariffs kind of coming through so far. I mean, we know that FDI is very closely tied to these wider factors, whether that is export behaviors, access to skilled talent, and labour markets as well. Dan, I was interested to get your take on how, if at all, you think some of these sort of changes that are being signalled over in the US might affect FDI with respect to the UK creative industries, given that interrelationship that we have with the US in this area.
Yeah, I mean, it's interesting. It's difficult to know how Trump will shape things up. I mean, arguably a stronger US economy means there's more money to float into all areas, including the UK. And I think that's kind of my central point, which is not a new thing now, but after Trump, but it's just generally the UK has been very cheap for very long. So, you've seen, again, not just in the creative industries, but across M&A is pretty vibrant, because effectively there are some best-in-class British businesses being bought for a relatively cheap price for all sorts of reasons, and partly coming to the Brexit point, partly because of Brexit, because there's an opportunity for US companies to come in. For example, I covered the acquisition of All3Media, which is a TV film studio, by Redbird, which is a big US New York-based investment fund. And they outbid ITV quite happily, because ITV just haven't got the resources that a big US fund does. So, you can see that happening. Whether or not that's a problem, it depends. If that happens again and again in the longer term. Back to my point there. And I think the other 2 points I'd make is that I mean, Brexit is obviously an impact on these things, but the UK creative industry is competing globally, not against Europe. It's so it's if you look at the tax credit situation for filmmaking, for example, Malta gave 47 billion euros, sorry, million billion, but 47 million euros to make Gladiator 2 in tax credits. And if you are, down the road from Newcastle, obviously the Sunderland studio is being developed. If you're those studios, you're seeing those things and you're thinking, it's not about Brexit, is about whether not Malta or Brisbane or Romania are giving those tax credits to take away the productions away from the UK. So that's going to be a big thing. And there's the last point is about Brexit, is obviously the impact on skills, as you say, which has been an effect and has impacted the people. And again, that there's a related impact on touring. People can't, bands can't go around Europe as easily as they have done. So there's a few things there, I think.
Yeah, thanks, Dan. And I think the point around M&As, which you touched on, has certainly kind of come up from the audience. So a question here, would people be able to speak a little bit more to the mergers and acquisitions point? For instance, do we have metrics for assessing the quality of these? And I think this goes back to that point around double-edged sword of M&As, some positive benefits for firms being part of these, but also possible loss of IP and long-term value, as Dan was indicating. Follow-up bits to that question. So one question about how do we assess quality of mergers and acquisitions? And second part, does the government need to be more interventionist in assessing how M&As benefit the wider economy? So would anyone like to take either of those 2 points?
I can talk. I can talk a little bit about it. If you, I mean, I don't. M&A. Well, as the Financial Times is pretty neutral about these sort of things, and I, think, it's the sort of it's the market forces at work here. It's more about the government. To me, it's more about the government, like I say, developing a really strong economy and a strong economic base for these sort of things, and in doing so, you develop companies who want to stay here and don't want to sell to the highest bidder, don't need to look to the US for funds, or wherever it might be. And so what was the other question? Sorry, I forget.
So I think there was one part of the question which was around, government intervention, and the second part was around, well, how do you start to think about assessing? How would you assess the quality of a merger and acquisition deal? What are some of the things that we should think about?
Quality. I mean, well, it's often sort of out of people's sight. These are private transactions. The government can intervene. Obviously, there's a CMA which would have a look at these sort of things, but it's very dangerous territory to start blocking deals. I think just on the basis that the government doesn't like them or doesn't, I think that's a quite slippery slope. The better thing to do is to have a more positive and proactive economic policy rather than to try to be in my view at least. I mean, everyone's got different views, but in my view, rather than be proactive, be sort of negative about these things and putting up barriers and walls and blocking things. The UK is a fantastic service economy which should have open doors and should be able to stand on its own 2 feet when it comes to M&A.
I mean, Jonathan, I was interested to see if you might want to come in on this. I know that some of the work that you've done before, obviously, and in the report is looking a lot at kind of motivations in terms of why M&As are happening in the sector. And I don't know if that might help shed any further light on this question.
Yeah, I mean, again, so some of the stuff that we looked at in terms of in this study here, in terms of the rationales, it's highlighting reasons why investors are wanting to come here through merger and acquisitions. And again, some of the key points is picking up in terms of yes, there's markets, there's customers, but organizations, the skills it can provide the organization. So it's a tight perhaps balance to make, but it's an indication that firms want to locate in the UK because of the nature of what these UK firms are offering in terms of their talent and creativity. It can potentially help boost finance in a sector that perhaps has quite a lot of smaller sized firms. So yeah, there's benefits to that. In terms of this report, as I mentioned earlier, the caveat is that we're identifying just counts of mergers and acquisitions, so we can't really go further in terms of and again, scale doesn't necessarily equate to quality, but in terms of potentially the jobs or the size of these investments as well. So it does pinpoint perhaps future work we would like to look at. So, for example, what are the growth rates of these firms or survival rates of these firms once they've been acquired? So yeah, but it's in terms of the features of why the investors are coming here. You can see in some of the deeper dive into our M&As that it pinpoints quite a interesting set of positive factors. And going to the previous PEC research that we looked at in terms of the motives of foreign investors locating in the UK, that didn't have M&As in it. It just looked at, in essence, the new greenfield projects and reinvestments. So these are investments by firms that have already located in the UK and want to expand their operations. And again, that provides a very interesting set of motives or reasons that came back. And it wasn't just all about market seeking. Market seeking was high, but it also pinpointed a lot of what we kind of classified into institutional factors, agglomeration factors, so infrastructure, presence of universities, skills, talent. And there was this, again, variation if you split it down across subsectors and across regions as well. So these features weren't just all about having access to skills in London, but it was across the regions and the nations of the UK as well.
So picking up on that theme, I think we've had several questions coming in around devolution and the role that sort of local and combined authorities and also devolved governments might play in boosting inward and outward at creative FDI. So I guess the question here is, what more can be done to encourage inward FDI at that kind of sort of regional and sort of subnational level? And how can we encourage and support better collaborative working between UK government and local and regional tiers as well? So I don't know if anyone would like to have a first go at that. Dan, go for it.
Okay, well, yeah. Yeah, I mean, it's interesting to Jonathan's point around the greenfield investment side of things, because you're seeing some of these projects which are, and it's good to be practical. I think that when you think about these things, because it's not just a sort of, it's not just a theoretical thing. So you've got, for example, the Sunderland Film Studios, which I think is a great example of the local the local government having spoken to central government and getting allocation in the budget to support that studio development, which is 450 million pounds of investment from a from a local company, but with backing from overseas as well. And that's a great example of a local area which has identified a project as economically important and drives the employment, has liaised with the central government to try and get allocations for funding, because it does require funding. It does require some sort of investment and stimulation of the kind of the investment, because basically we're competing on a global level here, which people can move these things anywhere, and Sunderland is probably top of the list often. So you have to bear that in mind. And there's a similar sort of project down south in Bedford where Comcast is thinking about developing a new universal theme park, which would be somewhere in the region of 10 to, I don't know, 50 billion pounds worth of economic investment if it goes ahead. But they could also build that in Paris, or not, sorry, they shouldn't be built in Paris because there's Disneyland there, but they could build it elsewhere. They could build it anywhere else in Europe, or indeed anywhere else in the world. So they're in conversations with Bedford, Luton, all the different the Department of Transport, in order to try and get the guarantees they need that they can build a big theme park there. So it's not just to my mind, it's not, I think the local mayors, local councils, whatever, it can absolutely lead on these things, but they need help from the central government. And then central government, for example, in the case of Bedford, needs to get departments across departments to support this sort of stuff. So in that case, the culture secretary is the sponsor of it, but the Treasury has to sign it off. Number 10 has to be involved. Department of Transport has to develop the east to west train line from Oxford to Cambridge. All these things need to come in, but these things need to play out, really. I think is my point, really, rather than so I think absolutely there's a huge role for local government and devolved government to get involved in, but they really need support as well, and they need money, more importantly.
And I guess when we're talking about money, we're talking about trade-offs and prioritizations. And I think that really segues nicely into a next question we've had in from the audience. It's from Jonathan. So Jonathan, I might direct that to you. Given limited budgets, which countries should the government target in developing trade links with UK firms, whether that be through delegate missions, introductions, and so on?
Yes, well, that's probably a question that probably need information upon where these budgets are within the UK government setup as well. But I mean, just drawing on some of the points that we highlight here. I know we have the US as one of the major contributors to FDI, but of course the US is large and is a major contributor in many countries, just as we locate to the US because of the US market and other features as well. But the report does pick up other markets as well. And so, as I mentioned, in terms of greenfield projects, we highlight China and India. In terms of outward, there's the role of Asian countries as well. Touched upon Brexit and Europe. So there's many features and a kind of broader a global pattern that we should be looking at, because as I think Dan mentioned earlier, this is a global world we're operating in, international, and there's different markets, and also within the different subsectors as well. So we do kind of highlight certain sectors are more predominant from certain countries and going to certain countries, and again, in terms of, for example, India, majority of their FDIs in the IT subsector. There's different patterns for architecture, advertising as well. So it can become, relatively complicated and nuanced if we start breaking down by type of FDI, by subsector, by location as well. And then that's not even touching upon where they're locating, for example, within the UK. So we have potentially these areas where certain sectors are locating from certain countries in certain types of investments more than others.
Thanks so much, Jonathan. So we've got, I think, a couple more minutes, but I'm really keen for us to try and get in at least one last question. And we started off kind of noting that there's obviously a lot of thinking going on at the moment about UK's industrial strategy and creative industry sector plan, which we're expecting late next spring. A kind of question for the panel. how should FDI for the creative industries feature in the government's industrial strategy? And also, where should industry be focusing its efforts? V, I don't know, thinking particularly around industry and your past experience, I didn't know if you would maybe like to kick us off with some initial reflections on that, and then we could perhaps hear from the rest of the panel.
Oh my. Yeah, having the experience of working for the multinationals such as Mattel and Adobe, it is an interesting perspective. I think for me though too, what comes to first to mind, and I think from what I've gleaned also in being involved in creative sector here in different capacities, I think one thing is, I know this might be also, we haven't really touched upon this, but I think also including more of the talent aspect, and also making it easy to be able to have the how should I put it, like with the be able to recruitment and talent of visas, because I know from the talent side in the creative industry, having discussions with different people, it makes it really, it's because of the way the Home Office and the whole government has strategized things, it's very limiting to bring in diverse talent, which a creative industry needs. And I think that's the one thing. I know I might be going off on a tangent, but when I first think about the new industrial strategy, that's where my mind goes though too, because if we're going to have a vibrant creative sector here, we need diversity. We need to be able to have open, not just have such a limiting factor of what's able to be coming in beyond to support what's already here, our talent pool here. That's where my mind goes to right away, because it's restrictive. And I think even too, coming from the larger organizations too, it does hold some issues too, because I know from some people who have worked more on the creative tech side, going from Silicon Valley to here, the diversity of talent to support the community here is not as robust as say as in SF per se at times. And there's that issue there, and it was a concern for him. And I think a lot of it's some of the policies that are in place afford the talent and allowed to bring in diverse talent. I think that's the one thing that really could be looked at. And I know from that's where right away when you asked me that question, my mind went to that. So hopefully I didn't go off tangent, but that's where I'm thinking about. So, because if we want to be a global hub for creativity and the creative sector, we need to be able to have that diversity and inclusive perspective.
Great, thank you, V. Daniel, I don't know if you'd like to add anything?
Yeah, I think just to reiterate that our results do show, there's importance of talent in attracting FDI, and I believe that V is correct, and I think if we believe that creativity comes from people, from human capital, then I think there's an important concern there of are we attracting, are we creating the pool of creativity in a good way? Are we letting it grow? And I think that's a question that we should look at.
Great. And Dan, is there one thing from your perspective that you think the industrial strategy could do to increase FDI into the sector?
Well, I certainly think to V's point, I think the education thing's really important. There was a whole new webinar we can do about creative industries and art in schools, which has obviously dried up, and as governments increasingly pushes people towards doing maths or whatever it might be. I mean, what I say that, I mean, obviously UK, I think should play to the UK strengths, and it's huge, and it's got, man, the good thing news is it's got incredible strengths in, advertising is second to none, filmmaking, music, books, it's just, you name it, we're very good at architecture, design. So there's some really good things to play on, I think would be the good thing. I mean, I guess my worry slightly is that there's a difference between a leveling up policy and a culture policy, which I think is currently being slightly confused. And there are creative clusters which needs to be worked on, but at the same time, just to moving money around the country for its own sake is not going to help anyone, I don't think. But ultimately, I think the biggest concern for me is that the victim, the industry doesn't become a victim of warm words and good intentions, but no money. There needs to be actual financial support for these different areas of strength, like I say.
And Jonathan, I think you make that point in the report around the signalling opportunity that we've got with the sector plan. But I think Dan's also highlighting the point around backing up the signal with that competitive environment. Jonathan, I'd like to give you the last word. What's one thing that you would hope industrial strategy might include?
Yeah, I think I have to. I mean, it's probably been covered by the other panelists, and just reiterate those points. I mean, in essence, the strategy's goal, it is one of the goals anyways, is to gain a greater share of international investment. And I think probably the positive note to finish on is the UK's long-standing role in general, but also in the creative industries. And hopefully, you know, again, we don't have to rest on the laurels, say, oh, the UK just generally attracts FDI. And yeah, we do need to be proactive in that, and signalling to countries to say that we still want their investment against a backdrop of potentially, you know, international. Well, we live in these uncertain times, so yeah, we want to keep on signalling that strength. Great.
Well, thank you so much, Jonathan. I can see we've hit 1 o'clock, so I'm guessing that our listeners' lunches will be either ending or beginning. So I'd like to take this opportunity to say a huge thank you to everyone for joining our launch today, and for all of your questions as well. We haven't been able to cover all of them, but those that we can, we will certainly follow up by email on. Also, a huge thank you to all of our speakers and panelists, Karen, Jonathan, Daniel, Dan, and Bea. And also again to our funders, the Arts and Humanities Research Council, without which this work wouldn't be possible. So if you've signed up to this event, you will be receiving the report in your inbox very soon, but you can also find it online. And also do look out for the event evaluation. We're really keen to continue to develop and iterate these events so that they meet the needs of our audiences. But at that point, I think I'll leave it there, just to say a huge thank you once again for joining the Creative PEC today, and we hope to see you at the next event very soon.